Right, good evening. It's Thursday, the 25th of June, about 8 p.m. Eastern Time, and we're delighted to have us joining us this week, Robert Wu, who is the CEO of BigOne Labs, and also the founder of Baiguan News, which is a must-follow China specialist Substack that I've been a happy reader of for, well, it must be a couple of years now.
Yeah.
Welcome, Robert.
Hello. Thank you. Thank you, Rupert. Thank you, Benny, for inviting me.
Thanks for coming.
So, Robert, first of all, I mean, BigOne Labs is an alternative data company in China. So you're seeing a lot of things that those of us with an external prism, might miss. I mean, I think the one thing front and center that I want to sort of kick off with before we start talking about stocks, which is your other passion, is what can we feel? Where can we get comfortable about the state of the Chinese consumer right now? And if the Chinese consumer is continuing to suffer, or at least sit on his hands with respect to spending, why is the government so reluctant to, feed out a bit of fiscal stimulus?
Yeah, I think it's been a while, right? Since 22, I guess 22, 23, 24. It's been this period of time where there was a lot more uncertainty about household confidence, consumption, and all that. It becomes a thing that people talk about, right? All the talk about deflation, all the talk about high saving rates. What we observe is that things keep declining for a few years, like confidence, price level, and all that, until around I think late last year. I wouldn't say things recovered, but I think everything just become more, I would say, normalized, right? If you look at the price data, the talk about deflation was gone now, because obviously deflation has stopped. There's been stabilization in the pricing levels, and in some sectors, in some quarters, it has actually come up, right? Part of it may be due to the oil prices, the geopolitics, but part of it are genuine. And there has been also a genuine desire from Beijing to finally kind of check on deflation, involution. Everything is kind of tied up in that direction. So things are getting normal. And if you look at the spending, from the end of last year to early this year, things are actually coming up in a positive way. Like, we track a lot of data. We track, say, luxury spending in China, discretionary staples, all that. We do see an obvious, noticeable trend starting from late last year that many of the segments we track, they have been actually declining for a few years, till Q3, Q4 last year, where things start to kind of recover. Q1 of this is actually pretty good. Q2 is problematic, but then it's also a mixture of many things. High base of last year because of the subsidies and all that, and also because of the partly also affected by the geopolitics, but not so much, a little bit in China. So it's a mixture of things, but I think overall it is true that just to put it simply, things are not getting worse from the sentiment level. They are stabilizing. People's expectations are reset, and people are accepting the new normal, right? So I think it's interesting that there could be a disconnect between how the capital market perceive this and how households, real consumers, perceive this, right? If you look at the capital market performance, the stock market performance of the consumer companies, the valuations and all that, you kind of have the feeling that they're assigning a 7, 9, 8, years terminal value for the sector. But the reality is definitely not that. I think the capital market right now portray this way more pessimistically than the actual reality on the ground.
Yeah, I mean, it's certainly. I mean, it feels like that from the perspective of an offshore investor in China. I mean, this is the New York FANG futures versus the Hang Seng Tech futures over the last 4 years, and it's been one-way traffic. And when you just look at the sort of the giants that offshore investors are so familiar with, the Alibaba, Tencent, Baidu trio of BAT, it's just been a case of sort of melting multiples. But I think there's an interesting story here. The whole AI optimism that's carried the hyperscalers until recently in US markets has had completely the opposite effect with, established tech champions onshore in China. From a local investor's perspective, some of these BAT stocks, I'm in your Discord occasionally. They're widely derided as no hopers. These champions of the past. Everyone's moved on to the Cambricons and the Jipus and the hot AI stocks. But tell me what you think the China tech giants are doing right and what they're doing wrong in AI specifically.
So I think maybe we can set up a bigger context here, which is, it's natural for us to project what we understand about the American Mag 7 CSPs onto understanding China's kind of counterparts, right? Like I'm sure when you are selling the Alibaba shares a decade ago, you're saying this is like Amazon of China, right? Baidu is like Google of China, right? So it's easy to set up this kind of psychological kind of
very
link,
lazy.
right?
I absolutely hate the terminology, but I was guilty as charged of doing it.
Yeah,
yes.
Yeah. So I mean that's also, that's a way. It's an easier way to make sense and to understand. But ultimately, this kind of analogy will break apart, and it kind of broke apart more and more in the last many years because they have, independently grown into some very different kind of things. So, for example, Baidu is still the search engine in China, except Chinese people don't search. I mean, they don't search on the web page. They don't have a go-to search app or search website. They search within WeChat. They search within many other apps. It's a very distributed, highly fragmented space, right? So it's different. So a lot of things are different, and especially the roles in AI. That's also very different. So all the major internet companies in the U.S. they have their full weight into AI. One big reason is that they have big cloud service, existing cloud services, and a big cash stockpile to support the capex. While in China, yes, Alibaba have a cloud service. Tencent also sort of have a cloud service. But the reality in China is that the B2B service software and all that hasn't really taken off at all before, like in the last couple of decades. It's a small sector in China. We haven't really built up a gigantic kind of B2B software SaaS industry to begin with, right? So all at the same time, most of their business are consumer related. So they have this kind of consumer business that's like the anchor of their weight. But then they do have some cloud services. They do have some ways to expand into AI, but not as in a massive way as the American counterparts. So that's also where some of the analogies kind of broke down.
That's triggered an interesting thought for me because do people believe that there is money in consumer AI, right? And so this is where I'm getting to, because obviously if you look at the sort of the WeChat infrastructure that Tencent owns, right? If there was the last app that anyone in China would delete off their phone would be WeChat, right?
Yeah.
So they own that that ecosystem right now. So I mean, it seems certain to me that if anyone was going to be a consumer AI winner in China, it was going to be Tencent, right? Should we actually be thinking, well, really the money in AI is going to be made in enterprise land, so actually thinking about consumer AI dominance is a complete distraction? Maybe that's the missing link.
Maybe, because there is already some kind of consumer AI winner right now in China, which is the ByteDance, which is the Doubao app.
Yeah.
It's a very prevalent app, especially among, you wouldn't believe, among many old people. Vast majority of people, the people kind of, Pinduoduo, they claim to serve the vast population in China, become the kind of her companion to a lot of people in China. It's highly successful from a user perspective, but also it's not making any money.
Yeah.
Yeah, like it's still very hard for a consumer to pay for that kind of thing. And if you look at Tencent right now, I think the biggest part of their AI strategy is also not pursuing the kind of consumer part, but they are aggressively investing and building products that are on the productivity sides. They have this Buddy series, right? WorkBuddy, Data Buddy. I'm a user of WorkBuddy. It's almost like Cloud Cowork. And you can plug in not just Tencent's own model, but you can plug in DeepSeek V4, many other open source model, and it can help you do a lot of stuff on your computer locally. I think they're getting actually more successful on the productivity side than the ByteDance, which is ironic because ByteDance have a Feishu Lark suite. They should be able to do that. So it's kind of switch camps in some sense in this new era. Yeah,
That's fascinating. So in terms of the monetization path, right? Chinese tech leaders are, are really focused on productivity against existing businesses rather than any kind of direct sell as a software service. I mean, I'm just trying to organize my thoughts around this right now. I can't decide whether actually the rest of the world's slightly missing a trick, because this was always the answer.
Yeah, I think there's a consensus now that the biggest part of AI, as we understand, will come from business. The problem here in China is there is the debate and concern that, as again, B2B service has never been a thing in China, never been a big thing in China. Will AI be able to solve that? It's possible, because the reason that B2B is not a thing in China is because Chinese businesses care about results. They don't care about processes. They care about results. They care about whether your software can bring new clients, not just how well you organize your CRM, how efficient you are, right? So that's where the traditional software don't do. They are not very good at increasing revenue. They are good at maybe lowering some costs, but costs are still already low in China. So where does the cost come from? But AI may be different. AI is more about results. Theoretically, your agents can bring you the results. So it's conceivable that people will start to pay that. And maybe that's an interesting thing that we need to watch. Maybe AI could fundamentally change how B2B services are done in China. And that's where many of these companies are betting on, the big internet companies, but also the independent AI houses. They are more focusing on the coding, the agentic path, rather than just the traditional kind of Chinese internet ways of doing things.
China is interesting though. It's because it's like, the consumer they've been digital longer than in the West. Like the
Yes.
way I like to think about it, the consumer. I remember I was over in China, was at Fidelity, and they had their first Home Depot and Best Buy, and it was funny because they had the worker to customer ratio was like 4-1. I was like, okay, let's see if these guys last. And they basically skipped that part of it, right? They went right from nothing to we're going to go right to you. You know what I mean? And they're going to do over the app. So they have a different kind of consumer. Maybe there is the way to look at that. And so we see the consumer AI. Most of it's just advice, right? And so do you think that because is that why the LLMs there are so cheap? They're or is it just a function of that's how China does business? It's a knife fight, and everything they do is just cutting the cost down to the bone, basically. Whether it's cars, T-shirts, LLMs, whatever.
Yeah, I mean, you mean the consumer AI, like how, like why consumers don't pay for that?
No, but maybe what I'm saying is like they're already savvy, and so you're saying they don't have the ability to pay, right? And in the U.S., that's a big concern right now. Rupert and I have talked about it a lot. It's like, how are they going to pay for this massive amount of capex? And so in China, it seems like they went the Russian model. If you ever talked why Russians, they're so good at programming, it's because back in the day, they all had to share one computer, so they'd get 1 hour, and they were working with constraints is the main point, right? So, China hasn't had the chips, so they had to make better. So they focus on harnessing. They knew the end consumer wasn't there. They just had to start from a place of efficiency, whereas in the U.S., we're like, hey, let's get Ferraris and let's spend as much money as we can. I mean, is that maybe that's where the model is going to go, because it does seem China is the producer of the world. Why wouldn't if this is a commodity, why wouldn't it be any different, I guess?
I believe so. Yeah.
I just grabbed this from a JP Morgan piece that came out earlier this month. And what's so interesting, that green quadrant in terms of efficacy and low cost is where all of the Chinese models are sitting right now. And the Chinese models are the triangles versus the Western models, which are round. They've optimized for that. I'm afraid I think that's the right call. Ben's actively involved in an AI company right now. I mean, how are the discussions going there in terms of the role that Chinese open source models start to play? Ben?
Me? Are you asking me?
Yeah.
Oh, sorry. Yeah, I mean, we've been using them for a while, and you know that I use Manus and I use Kimi regularly, right? I like them. I think that ultimately people are cost conscious. It's very easy to press a button. Everyone's impulsive. They're like, oh, would you like to do this? Would you like to do this? Until you're like, oh, I just spent $1,000 on tokens. Like this is an expensive habit. And so I think that's the right model. And if you think of LLMs as commodities, which I do, and I think that's the right way to look at them, it just seems like China's going to be the leader because either it's subsidized or it's just because they already understand that that's the way to go. And maybe there'll be a bifurcation where Claude sits on top or something, whatever. One guy is going to be able to be that frontier model that's in front of everybody else. And it seems more and more like it'll be Anthropic. But let me ask you a question on the software side. Why is it that there's no business to business, or what do they do? You said it didn't do it because they didn't get results, but like they have software. Where are they all using, Linux still, or like whatever, Lotus spreadsheets? Like what is, like, is it internal or is it from the big guys, or what is that everyone's using?
Yeah, so there are software companies. There are big ones as well. It's just that there's always this tension between the clients and the vendors. The clients always want something more customized for them. But the vendors, they want, as any software companies, you want standardized, you want SaaS, right? Just like do one copy and sell 100. But that kind of model have never taken off in China, because all the clients are asking, why should I pay for this? I have my own engineers. We can also build this on our own. If we pay just for everything, for something that everyone have the same, no, we shouldn't. We don't pay for that unless you send your engineers to my premise and build up things for us. But then that becomes terrible economics for the software companies.
Yeah, it's a consulting business at that point. Yeah.
Yeah, exactly. Well, today though, I'm afraid that most of the software companies will become that. I mean, in the US, with the AI, a lot of the software companies are going to kind of redefine what they are doing. So in some sense, Chinese software companies are already doing that, right? You hear the stories of OpenAI and PE funds. They kind of form joint ventures to acquire software companies and to kind of fix their software using AI and all that. That kind of consulting / AI thing is what Chinese companies are doing anyway. So like in the early this year when there's a SaaS kind of collapse in the US, the Chinese software companies actually didn't move that much. There's some decline, but not so much, right? Because there's no SaaS anyway to disrupt.
Yeah.
Right.
And they weren't trading on 10 times forward sales, right? Either in the first place, which is the real vulnerability. Sorry, we glossed over something which I want to put a finger on because I don't know the answer to this. But this issue around model subsidy and training subsidy around the major models in China. I mean, where do you think the real truth lies in terms of the true cost of training these models and the true cost of running them?
Subsidies? You mean like government subsidies for the models?
Whatever it is, you know, to what extent were chip bans circumvented? To what extent were you know? Where do you think? I mean, I'm sure it varies from case to case, but where do you think the sort of median truth is?
Right. It is very opaque, I would say. It's definitely true that, well, I can't say it's definitely true, but I feel it's true that some of that is circumvented. Some of that, at least a few months ago, half a year ago, there are some chips that shouldn't be here, were here. But I don't think that's the main reason behind the development. I mean, it's a mixture now of legitimate foreign chips, illegitimate foreign chips, and more domestic chips. And if you look at the models, like the open source models, a lot of that they actually also write their own academic papers explaining their strategy and all that. A lot of that are real innovations, right? DeepSeek V4 this year, they find ways to compress the memory almost by 10 times. So saving costs on that part. That is innovative. Nobody is doing that. There's nothing to copy from. As Benny said, there are constraints and people optimize for that. And then there's a conscious attempt to get away from US tech stack, right? Like
you wrote a fantastic piece. You wrote a fantastic piece. I think it was about 2 or 3 months ago, around the counterproductive, at least from a US perspective, the counterproductive effect of trying to starve Chinese software businesses from the US tech stack. Why don't you take people through that thesis? Because I thought I'm a tech layperson, and you just laid it out perfectly, Robert.
Yeah, I mean, it's I think it's a month ago when Huawei announced their logic folding technology, which is one way to stack their chips on top of each other, because they have this advantage in the so-called advanced nodes. So they really can't carve the transistors so tiny as TSMC, NVIDIA using the ASML EUV machines. They don't have that, that's for sure. But then, the general direction of the industry of semiconductor is, globally now, is not to carve more tinier transistors, because there's only so much space that you can do that. There's physical limits for that. You cannot really get to that small. So the general industry trend is to do a lot more interconnect technologies to connect chips together into a cluster of chips, as if it's a single chip, a very big chip connecting all these things together, right? And then there's also the stacking technology to make chips kind of very close to each other so that they become almost one chip. And Huawei is kind of developing to that direction. It's kind of a new game where everyone is, kind of new. The baseline is similar. They just compete on the similar level, and that's where they're betting on, right? On the other hand, DeepSeek is doing that too. Right now, memory is a key constraint. It's a crazy market now. The memory, not just the stocks, but all the memory products. You see Apple, I think they kind of collapsed yesterday because of the worries about memories and all that. It become a constraint. And now, that's a new problem for everybody. And the companies, Chinese companies like DeepSeek, they're just like faster in terms of adapting to this new world, right? So all these constraints are forcing China to take on an independent path, a path that's not economic for if you don't have the constraints. And I think it's possible that Chinese companies are betting that the same thing that happened in the EV industry in China is going to repeat again, right? So in the EV industry, it's also almost like a constraint industry, because in the before, Chinese companies, they want to emulate the Western automakers in the traditional age, the ICE age. But actually, China has never been able to do that. Yes, you can make a car, but can you make a globally competitive car that consumers around the world are willing to buy? China has actually never been able to do that, except from some really low end, Chinese cars. But in the non-EV age, they have never been able to do that. But then the game changed. Instead of betting on the old technology, why don't we bet on the new? So in the new field, everyone is also new. There's no advantage of incumbents. Everyone starts afresh. And then you just double down on the new direction, right? So that's, I think, fascinating. And that's a very interesting thing to factor in whatever models that you have about the future, is that there could be a divergent path of development in terms of tech.
So what you're saying is forget Moore's law. That was yesterday's story in semiconductors. Yeah. It's all about getting stacking right and getting clustering right now. Yes. And so that's the ICE to EV leap that China's trying to execute on semis. I think that's interesting. I think that's really interesting. I mean, and in terms of memory specifically, we've got an emerging giant to scare Micron and the Koreans, right?
Yeah, the CXMT, and also to a lesser extent the YMTC. These two Chinese giants are doing it's going to be massive IPO. Not in terms of fundraising side. I don't think the fundraising side will justify their actual value, but the IPO, post IPO market cap, everyone's like watching that. It's going to be could be one of the largest, if not the largest, A-share company after the CXMT IPO. Yeah.
And so can we talk about that? Can we talk about this for a second? Because to go back to what we were saying before about China, cheap LLMs, right? That's an issue in some ways, but the China bringing out a bunch of memory supply is another issue that's talked about a little bit, but it's not talked about nearly as much. And I was on the phone with a guy today. We were talking about it. How are they? Again, Rupert likes to say that he had amnesia because he was beat over the head with having to do 2 SK Hynix recapitalizations in 2 years.
Yeah, I'm afraid I have not participated in this year's memory bull run at all.
And I bought Micron 10 years ago for $9 because they were like the last guys on the field still standing. The supply shrunk, and all these new pod shop boys and chasers don't realize this is very much a commodity business. And what's funny is I pulled up U.S. Steel's chart today. U.S. Steel chart looked a lot like Micron's chart. It was a 21 bagger from 02 to 08 when China was running that huge capex boom in the housing, and then did the Christmas tree of death nosedive. And I don't know, why is this any different? Like, so let's talk about the supply. Can you give us a little detail there on what was going on?
Yeah, it is. So Chinese manufacturers of memory are definitely going to be the key source of incremental capacity in the next few years. The difference, I mean, there are some nuances between the two. So there are two players, CXMT and YMTC. YMTC is mostly in NAND, SSD, while CXMT is more in the DRAM and also trying to compete in terms of the so-called HBM technology. Yeah. So I think the risk is much higher on the NAND side. It's much more commoditized than on the DRAM side. So YMTC, I think they are going to be, if not the second largest, at least the third largest NAND manufacturer in the whole world, and will be directly competing with SanDisk, Kioxia, also the SK and Micron. They also have their own NAND businesses. So it's more like a more fragmented businesses, but it's also the more degenerate business right now because it's the the kind of where the money overflow to. The torque is higher, faster. So. But there is nothing to stop YMTC to take more shares. They can just invest in more capacity, and technology-wise, they are quite equivalent to each other. So I'll be careful about NAND. DRAM is a little bit different.
Back to DRAM, yeah. Robert, back to DRAM. So just in terms of CXMT, obviously you've got an oligopoly of Samsung, Hynix, and Micron right now in DRAM. What kind of sort of market share scenarios can you paint for CXMT? Because I don't think it'll be much to, it won't take much competition to destroy those 80% gross margins that Micron announced the night before last, right?
Yeah, so the way it happened will be that I think is, so CXMT is in DRAM, but they're currently not in HBM business. I mean, they demonstrate their thing, but there are a few generations behind, and they're not in any major purchaser buyers kind of supplier list yet. And it will take a while for them to do that because it's a more tougher technology. But in terms of DRAM, they are pretty good. They already come into a lot of consumer products and all that. And actually right now there's more money to be made in the DRAM business because HBM is kind of more fixed, right? You kind of set up your relationship with the CSP, NVIDIA, and you have fixed yourself. And it's hard for you to raise prices. You have rig negotiation, but that doesn't come very frequently. DRAM is totally degenerate, right? It's totally market forces.
Always has been.
Yeah, it always has been. But then people are paying attention to DRAM's prices as a proxy for the level of capacity issue in the industry. So it's conceivable that the more DRAM, well, CXMT is not going to challenge the big three in terms of HBM for a long time, I think, but they could challenge in this DRAM business so that it could be a force of deflation for the DRAM business, which could be able to temper the enthusiasm for the whole industry. HBM will stay there, but it's also stable, right? It's not where a lot of the enthusiasm come from. A lot of enthusiasm come from the kind of incessant price increases of memories. That will have a deadline, I think. That kind of crazy upsurging memory costs will have a deadline because it's in everyone's interest, everyone that is not a memory stock's interest to push that down, right? Apple is going to push that down. Many people are going to push that down. It's just getting out of hand, kind of. Yeah.
Yeah.
And so when you think about that, it's like I just looked it up. It looks like CXMT is at 200,000 wafers a month. and they're adding like 50 or the 290, and they're going to add another 60 by the end of the year, and they're trying to get to 500 by 2027, 2028, and then YMTC is going to be doubling. So they're on plans to double their capacity, right? And you never know where the breakpoint thing is, but I would just offer that from the software side, there's a lot of things of an LLM transformer. The way it works is it looks at every piece of context going back, and there's lots and lots of things that are going to be middleware and like middle layer that sit above the LLM, below the app, as well as new models that come out. So it seems to me when we think about this that it's going to be like the perfect storm of this supply is going to come online at the exact time that there's adoption from the engineers who made software better to, reduce your demand for memory. And then also the chips, like, the Rubin comes out and it's got half the memory, that they were expecting or whatever. So you can see it brewing. Now, I'm not advocating shorting Micron or SanDisk right now, but I'm just saying, like, you can kind of see where it's going. Let me ask you a different question. You said growth has stabilized. So when I look at the Chinese 10-year bond, it's sitting at 170. It's been the best bond market in the world by a wide margin. Like everybody else's bonds are, the US hasn't been good. It's been a little bit better, but China's been the best. China's currency's been good. Not quite the Chilean or the Colombian peso, but it's been good. And do you think that is a function of like, there's no growth, or is it a function of there's no expectations of growth? Or do you think it's just a function of people took money out of the real estate market, which is the big savings vehicle, and put it into bonds? Like, what's your thoughts on that?
So, it's funny that, China right now have this lower growth, but very good currency and bond market, while, at the same time, South Korea, Japan, they have like their depreciating currency, but the economy seems to be on fire. So it's a very interesting kind of crossover. To answer your question, just from my understanding, it's a mixture of many things. It's a mixture of, but mostly the expectation that we're not going to have the same kind of growth that we had a decade ago or 2 decades ago. And there was such a huge kind of transition, a shift that was, Rupert, you must be known what China was like, right, 20 years ago. And that was crazy as well. The level of growth, the kind of collective growth. And then we suddenly, even we just changed the gear, we changed from that speed to a even normal speed. People's expectation is going to take a while to really adjust, right? Because we still had memories of these years. People talk about the beauty of the 经济上行期的美, the beauty of economy that is on the rise. People try to kind of feel nostalgia for those years, and that's thing in people's mind. So it definitely take a while for you to change from 10% economic growth to 2 or 3 or 4%. So that's going to continue for a while, I think. I don't think it's going to be the Japan's experience, like 3 decades of this. It's definitely not going to be that, because we're already seeing some kind of stabilization in that area. But 5 to 7, 8 years is possible. It's very possible for people's psychology, mentality to adjust. Yeah, but everything happened faster.
We're kind of on that 5 to 7 year threshold now.
Yeah, because they were getting there, aren't we? Like,
we're pretty close.
It out in 2015, right? Like, and so we're 10 years into it, and then the real estate peaked out. When was Evergrande? Evergrande was May of 21 when it officially went under.
Yeah.
Was that right?
That
didn't start then, right? So that we were talking about 18 or 19, really. So we are 6, 7 years into this, I think.
Well, I personally, I will maybe mark it at maybe 21, 22. That's where the things really kind of start to change from a psychological kind of point of view. People feel, oh, okay, the golden ages ended, that kind of thing. So be patient. We're already like seeing things happen faster than where it should be, like in the Japan's case. A big difference between Japan and China was China has Beijing, has the Communist Party, which is very proactive in terms of managing the thing. It's not like run by different interest groups and everyone have their own agendas. We have the system that is designed to deal with problems. So that's going to happen very fast. But also it's because China has a lot of areas that is actually underdeveloped than during, say, the Japan in the 1990s, where it's a smaller country and there's no hinterlands basically. In China, a lot of the young people, if they cannot make it in Shanghai, they go back to their hometown or the capital city of their home province. You see a lot of these different places, small cities, big cities, medium cities growing up in the last few years, all kind of preparing to set the stage for the next era. So that a lot of these scenarios are different. So that's, I think, fundamentally behind my kind of confidence that it's going to be much shorter kind of period of pain and uncertainty. And we are already getting out of it. So yeah.
So you touched on it, but I want to sort of rewind a little bit there. We talked about, the strong bond market and the strong currency. Something that I think both of us have written about a bit in the past is the shifting in terms of the way equities are viewed as a unit of savings in China.
Yes.
And, the attempts by Beijing to foment an equity savings culture. How do you think that's going? I mean, it's a wonderful narrative for me to get behind, but I want to hear it from your perspective.
Well, first of all, I have to emphasize this is not like a one-way street. It's going to be still a big, it will take several cycles to really get to where we imagine it to be, right? It's interesting to know that it's starting. It's starting that everyone, especially Beijing, is seeing the importance of capital market, the stock market. And last year was a great kind of representation of that, where the so-called national team get into the game, kind of really support the market with their own money, and they had a successful kind of experience with that. They get in at the right time, and they actually made a lot of money on that from supporting the market at the bottom. So that's good. That's they will mark down in their internal report that, okay, this is good. We should keep doing this. And also they exit.
This is the A shares. This is the A shares versus the FXI. So this is precisely what you're talking about there, Robert.
Yeah.
That's the national team in action.
Yes, and they also exited part of that at the right time as well. So they're really good at doing this now. But at the same time, we are not entirely a mature market in terms of stock, because still, just like before, the stock market is still a kind of look upon to be a fundraising channel for the industries. And I think the fundamental reason now behind all this AI tech kind of surge in A share is also because the Beijing is encouraging it, not directly, but indirectly, subtly, to encourage it so that it can set the stage where all these major hardware companies like memory stocks, AI companies, they can go out and list themselves. So that's actually still kind of in contradiction to the kind of market that we imagine, right? That more like an investor-friendly kind of market. But right now, because there's this political kind of agenda behind, so that's kind of still the old flavor, right? Almost like treating the market as a kind of ATM machine for the companies. That will also still happen. So that's what I mean is this is going to be ups and downs. So you can imagine that when these new AI companies, they go out and list themselves, it could have a liquidity issue for the market. And so there was some downtime as well. But this time, it's different in the sense that we have a more sophisticated regulator and the national team, right, who can provide an ultimate put in the market. So it's going to be, not a straight line. It's going to be ups and downs, definitely.
So Ben and I have been talking about equity supply issues facing US markets. You put out a really interesting piece the other day about equity supply facing at least offshore Chinese equities. I'm sure the same is slightly true onshore as well. Historically, IPO booms had a tendency to kill Chinese equity markets in the past. A fellow reader of Baiguan News is a friend of the pod, Louis Gave, and he always has his South China Morning Post test with respect to supply facing the Hong Kong market. When the South China Morning Post gets to be the size of a telephone directory because there are so many new issues that getting advertised, it's usually a sign of trouble to come. You put together this thesis on the risk of indigestion created by supply in Chinese equities. Do you think this is a 2026-27 problem or a 28-29 problem?
I think it's already an ongoing problem, right? The people are already concerned about this enough that even the whole Hang Seng index is coming down this year. I think right now it's down 10%. Despite Asia is actually doing pretty well. U.S. stock pretty well. A lot of the places in the world doing well, but Hang Seng is actually declining. I think people are just generally afraid already of this liquidity kind of wall that's coming up right now. Next month, Minimax, Triple, they're going to have some more shares freed up. Yeah, and then you have so many IPOs. Rupert, if you're still in the same business, you must have a pretty good bonus this year and last year too, right? It could be a
sadly no longer, but I don't miss it that much, I have to say.
Yeah, but it's just that's just very key characteristic of the Hong Kong market is where just waves and waves of companies coming up, like from the banks from the old days, and then tech companies today, and it's all in cycles, right? The cycle is a key feature of the market.
It's a great predictor of expected returns. So I mean, this is again a chart from your node. I mean, where we are in terms of that gold star is not a great sign in terms of potential.
That is a great chart.
It really is, isn't it?
Yeah, that's fantastic. Yeah, I mean, the thing about China is you look at the growth profile and you're like, wow, this should be great. But Chinese equities haven't done anything over 15 years, or 20 years, or just not. It's like it's a range and it's tradable range, but like in aggregate, it has not really done all that much.
I would say the key reason is the supply of these stocks, right? I mean, it's a very new market. The A share is fewer than 40 years old, but barely 30 years old. And the Hong Kong market is longer, but then the Hong Kong market experience of Chinese mainland companies is also short.
So 1994, Beijing Enterprises was 1994. So this is a 30. Chinese equities are a 30-year market.
Yeah. So the right proxy to actually look at the growth is actually the total market cap, which is growing by a lot. But then, from an investor point of view, you don't care about market cap, right? You care about the returns. So that's where, the sacrifice is. My hope is when most of the companies that should be there are already there, and it's becoming more like a stable. I mean, the existing pool, the stock is being stable, and the flow is, as a percentage of the stock, is only getting tinier and tinier, smaller and smaller. I mean, this is going to be mathematically true. It's the way of math. My hope is that by that time, you will have the period where there is more stable supply of the stocks, and it will be a re-rating of that. I'm just not entirely sure when that happens, but it will definitely happen after this year, because this year we're going to have some major like liquidity and major supply issue.
Yeah, and ultimately, I think, to be honest, the last sort of 20 years, in terms of how the market reacts to these flows of supply, is something that the US market needs to start getting used to, right? So that was part of the reason why I talked about the sort of equity savings culture, because if we are going to, see maturity in Chinese equities, there needs that steady drip of household savings in that asset class, right? Which we may be beginning to see yet, but it's certainly not a floodgate. But yeah, until then, the old supply demand stock to flow issues are going to prevail.
Yeah, I think right now, from a household perspective, it's still not. It's maybe streaming into the market, but not as you said, not like a floodgate. But I think for many professional investors, like insurance companies, they are definitely seeing the value of equity market. There's low interest rate, but then there are high dividend yield for many of the stocks. It's just obvious for insurance company to allocate more to equities, if just to have more returns, better returns. And a lot of the high dividend yield companies in China, they are state-owned, they're monopolies. I mean, why not for these insurance companies? So that's very different from, say, a decade ago, where you don't have that kind of setup. Right now, there is the possibility of more and more money coming in. But in their own ways that are kind of different from the US. But I do see the bright future for that, but it's definitely going to take the timeline, the time scale when I talk about that is a long one, 10 to 20 years almost. Yeah.
And what about sort of capital allocation and governance, right? There's been a lot of noise, and I'm sure there's been a lot of looking over up northeast at Japan and looking at what a proper crackdown on capital allocation and governance can look like in terms of equity returns. I mean, how real is this shift? I mean, are we going to see payout ratios dramatically increase? Are we going to see some proper buyback action? What's your sense as you speak to CEOs?
Yeah, it's definitely we're already seeing that, right? For the last few years. There's the mindset change, both at the state-owned enterprises side and also at the private company side. I think a decade ago or something, we don't really see companies doing buybacks or dividends that much. State-owned enterprises, they don't do that at all because they're all part of their KPI. Private companies, they want to keep money to themselves. A lot of the listed companies that have the mindset of, even if it's a public company, but the money in the bank is my money. That kind of attitude is prevalent. So I mean, me is like maybe the controlling shareholder, right? And you can do whatever you want with that. I think that's definitely is shifted, right? So on the state-owned enterprise side, a KPI now is shifted toward boosting ROE and boosting shareholder returns. So that's quick, that's fast because it's state-owned. If you reset a KPI, they would just do that. So you see a massive increase of payout ratios of state-owned enterprises in the last 3 years, and that become the kind of the ultimate kind of boost for the value of these banks and enterprises. And from the private company side, I think people are also getting more used to the idea that there should be proper governance and you should buy back the shares, when things go off the rails, and then the dividends, all of the companies, where their expectation for growth is getting lower, it's also good. that they feel, okay, maybe now we should distribute what we have, right? So I think the culture, the system, the everything in terms of that has changed and become mature. It should be like that. It's a company invested by all the shareholders, and ultimately a company exists to provide value to the shareholders, right? So that's definitely has changed. I don't think it has completely changed, but it has changed, and it will keep changing in that direction.
Perfect.
Yeah.
Well, listen, with the last few minutes, I really wanted to touch on a sort of completely different topic, and it's back to the consumer, because some of the research that I've enjoyed from you and your team so much has been around the development of guochao, and you can explain what that is, and how consumption habits are not all sort of, it's particularly at the luxury end, Western leaning anymore. And the way in which the consumer is developing, I think is fascinating, and you guys have covered it very well.
Yeah, so it's more like finding the cultural roots in China. I would say there's an interesting contradiction here. When you talk about, say, luxury is about heritage. But still right now, luxury is mostly European and some American. But the thing is, China has a lot of heritage. It's just a really, really freaking long history of a lot of stories and experiences and many things, right? So supposedly luxury, I mean, Chinese luxury should be a thing because there's so much heritage to draw upon. So that's why I think this is just the beginning of it. This is just the beginning of it. People are basically just rediscovering the long heritage, long civilization of China, and applying that to daily lives. And that's really what this is all about: rediscovering the roots. You see a lot of these kind of performances, and also the individual hobbyists who like to dress in not just traditional Chinese dress, but traditional Chinese dress of different dynasties. There's all these content and all these performances of the Han Dynasty dresses, the Tang Dynasty dresses, the Ming Dynasty dresses. It could be a whole set of many different things. So there's a huge reservoir of symbols that people can draw from. And like the thing about Lao Pu Gold, for example, they're just really the pioneer in that, but they are not going to be the dominant force. I think it will be just like a whole new offshoot of all of these companies. While at the same time, you also have companies that have zero heritage but still be successful, like PopMart. It's a very interesting, kind of postmodern phenomenon of, not just you're creating these, IPs, toys, but those toys have no stories. They have zero stories. All they have is the kind of community of people who kind of have a consensus behind these kind of cute, well, a little bit ugly, but cutely ugly things, right? But that's also a pathway as well. That's totally. I mean, if you look at the products from PopMart and you say you can say this is Japanese, you can say this is Korean, you can say this is anything. It has nothing to do with China. That's also will be a way of growth for many of the companies. So that's, to me, it's fascinating because you now have a fuller spectrum, and each pathway have a lot of potential, and that's where we think a lot of opportunities come from. Just to follow these newer companies and join either the high cultural heritage or just break down everything and start afresh. They are all going to do well. Yeah.
Listen, Robert, yeah, go ahead, Benny.
I was just going to ask one last question that I meant to ask. I just thought about it. We're talking about the consumer. We're talking about China and its growth. Okay, why are they running such a large budget deficit, the government, when they have huge trade surplus? Do you have any idea about that? Sorry, I just wanted to get that in while I had you here.
That's a good question. I don't think I'm I haven't thought about that. Yeah, maybe I'll think about that.
Okay, yeah, get back to
you
it.
got me that one.
I find that this is a very fascinating thing.
Yeah, yeah, good question.
I think so much of the trade surplus historically has stayed offshore, right? The proceeds
That's true.
That's true.
And you know, this is part of fixing. It's part of fixing the whole thing. If we can see Chinese corporates repatriating those assets, and you know, perhaps getting involved in financial assets directly instead of buying Nasdaq stocks, that could also be an underpinning to this stock to flow issue in Chinese equity market.
Yeah, because you know that's a Baba issue too, right? Like Baba has this balance sheet that looks great, but then you got to be like, oh, well, that not a lot of that money's in China, and so there's always been this thing of like, well, they don't want to keep it there because they're worried that all the banks and whatever, and because they need dollars, and I don't know. Look, we don't need to get into it, but I do remember that when Rupert and I first met, I was a huge China bull because it was like so hated. And then I remember looking at that balance sheet on Bloomberg, and then I was like, why are they not buying back more stock? And then it was like I got into the weeds and I realized that is a real thing, definitely.
You could still buy back the offshore float. Anyway, Robert, thank you for joining us. Why don't you tell people a little bit about BigOne Labs, and then I will shill Baiguan news for you.
Sure. Yeah, thank you. So the company where I'm leading is BigOne Lab. It's an alternative data company serving institutional investors and corporates from all over the world to help them better understand and track Chinese companies and industries. We are backed also by S&P Global, and I think we are the only Chinese company invested by S&P Global. At the time when U.S.-China relationship is still okay, it's really hard to do now. But then we also run newsletters on Substack. The Baiguan newsletter is where we show some of our data insights and also on-the-ground insights about the industries and the companies we cover. I also personally run a China Translated newsletter called China Translated, also on Substack, and it provides more kind of contextualized social and cultural and even political kind of context for understanding many issues. So feel free to subscribe.
I find Baiguan an incredibly useful resource. You know, I like to think that I spent quite a lot of time in China, but there is no substitute from, frankly, learning from someone who's still on the ground there in a different generation from me, and really understands, you know, the cultural and political, realities on the ground.
Right.
For me, it's a must read. And again, Robert, thank you for joining us. Welcome to your debut on Benny and the Squirrel. I think Robert, Benny, and the Squirrel, I think that's a wrap.
We're out.
Right.